Hi everyone, what is up? Welcome back to the channel. This is Aaron speaking. In today's video, I'm going to be sharing with you guys a question I get almost all the time. How do I differentiate between a pro trader and a failing trader? Now, I can tell you guys for a fact that it doesn't have to do with strategy. It's about discipline, purpose, and then your mindset. So in today's video, I'm going to be sharing with you guys how to distinguish between a profitable and an unprofitable trader. Without further ado, let's just dive right into the video. The very first point is having a trading plan versus trading on impulse. When it comes to professional traders, they definitely have a trading plan, from their entry criteria to their exit criteria, even down to their risk. But when it comes to unprofitable traders, they don't have a defined plan. They just enter the market based on assumption, and they probably just enter the market based on impulse. This can lead to losses in the market, and this can strongly influence your trading decision over a period of time. So the second point, managing risk and over leveraging. When it comes to managing risk, professional traders risk between 1 to 2% of their accounts per trade, whereas unprofitable traders end up risking almost 20 to 50% or even sometimes a full margin percentage on a single trade. It might work once, but over time, you end up going to be blowing your account, and most of the time, you are going to end up losing so much money on the market. Number 3, emotional control and reactivity. When it comes to professional traders, they learn how to minimize their emotions. No one can 100% rule out emotions from trading. However, a good and a profitable trader knows when to leave the market. And a failing trader is always fixed in greed, fear, and even FOMO. That is the fear of missing out on a trade. So when it comes to profitable traders, they learn how to accept their losses, stay calm during drawdowns, and also take advantage of perfect opportunities without failing. But with failing traders, one loss and they are spiral. They keep losing and trying to revenge trade, trying to make their money back, and end up losing even more than they anticipated. Trading with emotions is like driving blindfolded. You are definitely going to crash. And to the fourth point, consistency versus strategy hopping. When it comes to a professional trader, this is somebody that has practiced a particular system over a period of time and has maintained it. It doesn't have to be a 100% efficient system, because however, we do not have 100% efficient systems. No system in the world is 100% efficient. So definitely you are going to be making room for loss. So a profitable trader understands that success is doing the same thing over and over again over a period of time. However, with an unprofitable trader, they end up jumping from one strategy to another. If they end up taking about 2 to 3 losses on a particular strategy, they feel like that strategy is dead, and so they end up jumping from one strategy to another. This will never make you successful in the market. Find out one strategy. This brings me to the point of talking about the MarketGod strategy. There was a time I thought I mastered trading. I was reading the charts, taking signals, and even making a few wins. But no matter what I did, I kept losing over and over again. It felt personal, like the market was against me. I was chasing breakouts, entering emotionally, blowing accounts like it was nothing. That's when it just hit me. It wasn't the strategy, it was me. No structure, no plan, just vibes. And guess what? Vibes don't even pay the bill. So I went silent, took a break, and I came back with a decision. I was going to treat this like a real business. Rules, discipline, and simplicity. One pair, one strategy. I wasn't chasing pips anymore. I was chasing precision. I stopped being a gambler and became a trader. My losses got smaller and my wins got bigger. And more than anything, I finally felt in control. Not just surviving, but compounding. If you are stuck where I was, thinking another signal will save you, think again. What you need is structure, patience, mastery of self. No strategy can fix a trader who hasn't even fixed themselves. This course is everything I wish I had when I started. No fluff, no hype, just the truth. And the system that took me from being broke and confused to being consistent and in control. And if you are ready to stop playing and start winning, this is your moment. Enroll now and let's build a future, one trade at a time. So let's get right into point number 5, lifelong learning and overconfidence. A pro trader understands that market is dynamic and market does not always stay the same. However, an unprofitable trader is overconfident in that particular system and is never willing to adapt. Profitable traders are students of the market and are always working to refine their system. However, an overconfident trader decides that, hey, I found this particular strategy and I'm not going to be tweaking it over time. I'm going to stay with this particular strategy for the rest of the time. No backtestings, no fundamentals, no looking up to anyone in the space. And that is a very big red flag for success in the market. Now to the sixth point, patience versus overtrading. This is a very big issue. I personally have had it with this market. When it comes to patience, pro traders don't even take more than 5 trades in a week. Yes, you heard me right. Pro traders are very patient. They wait for the best opportunities on the market and strike. Just like a sniper, they wait ready for the market to get into their area of interest before jumping. But with unprofitable traders, they keep chasing the market, trying to catch every single move, and that is so bad for a pro trader. Remember the notion, more trades, more money? That is wrong. It's actually less is more when it comes to trading. Now to point number 7, long-term versus get rich quick. A lot of people that jump into forex trading, or especially the complete beginners, always think that forex is a get rich quick scheme. No, but with pro traders, we think otherwise. It's a long-term plan. We know that, okay, if I'm funded $100,000 and I want to be making $10,000 over time, that is 10%. We think in months, we think in years. Okay, so if I'm trading $1 million and I want to be making 10%, how long is it going to take me to make 10%? I'm not just going to be making 10% in a day and going to be happy about that gains. No, I want to take my time, because over time, little wins are still going to add up. If you make 1% every single day, for the next 30 days you have been making 30%. But if you try to jump in and making 30% in a single day, and the next day you have the chance of losing even 20% or even 50%, that's very bad for business. So you want to think long term and understand that trading is not a get rich quick scheme. Now to the 8th point, adapting versus stubbornness. Markets change. News, trends, volatilities, interest rates, they change. Profitable traders adapt. They notice shifts and adjust their trading approach. But failing traders, what do? They keep forcing the same strategy over a period of time and end up becoming unprofitable. If you are not flexible in trading, the market is definitely going to humble you. So to take a cue of that, anytime you find the market adapting, make sure you are willing to adapt as well. And to the last but one, setting realistic goals versus delusional expectations. When it comes to pro traders, we are realistic about our gains, but you see a complete beginner or an unprofitable trader funding $1,000 and asking, how far can I get this account? Can I make $50,000 in a space of 1 month or even 1 week? That's delusional. That expectation is too high to reach. Therefore, the risk is definitely going to be high. I'm not saying it's not possible. It is possible. Anything at all is possible on the market. However, you need to set realistic goals. If you're talking about hitting 10% or 20% over a period of a month or 2, that is realistic. However, that will give you enough room to reach to that expectation and become a successful trader over time. And to the last point, journaling versus guessing. There's something about journaling, always having that data to go back at when it comes to building that particular strategy. Journaling is like data. It gives you information needed for your progress. However, if you're just guessing over trades, you are definitely not going to be successful in this market, because you are not so sure about which trades give you the best opportunities and the best risk to reward to use over a period of time. Journaling can even help you to know that in this time of the year, it is the best time to actually be trading this particular system and using this particular risk criteria over a period of time. So there you have it, guys. These are 10 differences between a pro trader and an unprofitable trader. I hope you like this video. Make sure to hit that subscribe button and make sure to take the link in the description to join my Telegram community so you can take trades along with us and make money. Thank you guys. I'll see you guys. Peace out.